Hi, everyone. Welcome to another uLaw webinar. This time, we are having a very important topic, and the topic that we are going to tackle today is reconciliation in general. It's a law society requirement to do that. Legal practitioners have to reconcile their account and produce trust reconciliation statements on a very regular basis. So what we're going to do in today's webinar is we're going to open up the concept of reconciliation, try and understand it, and say, is it really such a complex process, or actually it's a very, very, very simple process? Just, there's a myth around it saying that it's a very complex process. So we will show you that reconciliation technically should not even take 10 minutes, right? While people end up spending several hours. I just put 3 hours here. I've seen people who don't understand reconciliation and spend several hours, and we'll show you how reconciliation can be so easily simplified, if you do things the right way. The key element of reconciliation. So we will bring in this webinar, and we'll talk about some of the points of doing it both in trust and general. Okay, so we want to do it in both trust and general, and we will showcase that. Let me enter full screen. So here's the agenda for today's presentation. We will talk about the reconciliation process in general. We will address how to do it in trust account. We will address how to do it in general account. We'll also have a live demo. We'll show you that reconciliation can actually be achieved, in a very, very, very quick way and under 3 minutes. Then we'll also show you why reconciliation is very important for audit. What does it take to be audit ready with respect to reconciliation? And we'll walk through some of the checklist, that the auditors have for reconciliation with respect to reconciliation, and the core aspect of being audit ready for financial management process. So we'll cover all these subjects in great detail. The chat lines are open, so please give your questions as we go through. And I'll allocate the last 10 minutes of this presentation purely for questions because the subject is a very intense subject. So if you look at the Law Society bookkeeping guidelines, they talk about accounting systems. There are several kinds of accounting systems. There are manual double entry. Now, these are according to the Law Society, and this is purely from the bookkeeping guidelines for lawyers and paralegals in Ontario, LSUC guidelines that I've just picked it up. You can see you can do a manual double entry system. It's simple, it is inexpensive, but it's very time consuming. It has a lot of arithmetic errors. Reconciliation on this system is not going to be easy. It's going to be one of the hardest things to do. The second kind of system is OneWrite. OneWrite is, again, simple, inexpensive, and you kind of post subledgers. You say, hey, this matter is where I got this much money. This matter is what I lost so much money. Again, it's time consuming. As your volume of transactions start increasing, it gets very hard. So first two are really, really hard when it comes to managing them in some volume. The third is using spreadsheet software. If you use spreadsheet software, again, it's inexpensive. You can automate your calculations. You can do all your math in spreadsheets. Excel can be a good tool. It's truly not an accounting software at the end of the day, right? So it kind of creates you problems with respect to doing reconciliation. There are a lot of software in the market which do general accounting, like QuickBooks, FreshBooks, or Xero. These are great softwares. They're one of the best softwares, when it comes to managing accounts, but they don't manage trust accounts, right? They're not designed to manage trust account, and reconciliation on them is not compliant with Law Society's requirements because Law Society's requirements ask you for trust listing, and they don't do that concept. So that's again not a very recommended way. The last one is legal accounting software, like PC Law, uLaw. These are legal accounting softwares. The advantage is they produce financial reporting exactly like the way the Law Society asks, very important, the compliance is really met. You're all the time audit ready. like when I say all the time audit ready, that means like, every month when you reconcile, you are actually audit ready. And that's what we will show you as part of this webinar, like, why is reconciliation making you audit ready? And then some of the softwares are expensive, not all of them, like, and this is the thing that we will really tackle today. Like, they say it required extensive training, and we'll actually show you that reconciliation is not something that you need extensive training. It's a pretty simple process, okay? So we, uLaw, we fall under this legal accounting space. We'll show you how to do reconciliation today in a very, very quick way, okay? What is trust reconciliation? What's the law society expecting out of you? I try to take this example from the law society bookkeeping guidelines, and we are breaking reconciliation into 4 parts. Okay, and these are the 4 parts that you need to keep in mind. The first part is what really happened in the bank. So this part you're actually showing that what is the bank statement. So you're saying, hey, $40,933 is what my bank balance is showing on August the 31st, right? Then you kind of subtract out all the outstanding checks. Like, there might be several checks that you could have issued to your clients, your settlements, mortgages. You subtract all of that. Then you add all your deposits. Maybe somebody gave you a retainer and you forgot to you deposited in the, you deposited just on 31st and the bank has not yet cleared. Like, you add that. Sometimes banks can have errors, like, they might have given you interest, they might have charged you bank statements. You subtract or plus them based on how they actually gave you, the error. Like, if, for example, if they took away money from you, you will basically, like, subtract it, and if they gave you money, you will add it, like, you will do that. And then you will arrive at what we call a reconciled mixed trust balance. So that's your step 1. Step 1 is basically showing what happened in the bank. Step 2 is we need a very detailed listing of the $39,496.70. Basically, if you're telling that the total outstanding checks is that much, which are the check numbers and when were they actually posted? You want a listing of that. The third one is you want to take this 17, 15, 30 and divvy it up into all your existing matters and clients. You need to say, hey, for Peter Piper, I have this much balance. For Susan Silver, I have this much balance. For Terry Taylor, I have that much balance. Add it up to this much. So again, to summarize, step 1 is you kind of calculate purely with respect to bank. Step 2, you list all your outstanding checks, again, a bank activity. So far, you have not done anything in the software. This is what you have maintained with respect to trust listing. And the step 4, this trust listing that you have here and what the bank is telling you the trust listing have to match. That's reconciliation. This looks overly complicated when you actually listen to it, but it's actually not. What you're actually doing is you're just taking statement by statement as it is in the bank, and you're just marking it, saying that, hey, I have the statement in my accounting software. I have the statement in this accounting software. This deposit is there. This withdrawal is there. And what you end up with is outstanding checks and outstanding deposits. That's all. So it's basically an accounting statement that clearly tells you everything that your software is matching what has actually happened in the bank. So again, it consists of 4 parts: recording the bank statement and balance, step 1, recording the outstanding checks and deposits. Like, I know in this example, the Law Society has not given deposits, but it's a good idea to even track deposits too, right? That's step 2. Step 3 is recording the client trust listing, and the last one is doing a comparison of what the bank has and what you have. That's it. That's all is reconciliation all about. Okay? In general, you are 1 step less. You only have 3 steps. The first step remains exactly the same. You basically put your bank statement, you subtract the outstanding deposits and your withdrawals, and then you arrive at, a reconcile this. But there's no concept of bank error here. Like, whatever bank has, you need to somehow report that, like whether it's an expense or this or that. Like, you need to put that. And then the outstandings need to be listed. That's it. So you don't have a client listing because this is your general account. It has nothing to do with clients. So you just list your outstanding payments and outstanding deposits. That's all. So General accounting is actually simpler than trust accounting because you perform one step less. Again, to summarize here, bank activity, outstanding checks, trust listing, trust comparison. In general, it's bank listing, outstanding checks, and outstanding deposits. That's it. So, you don't have trust listing and you don't have comparison. So, so that's all you do. Now, let's quickly jump into a demo because I want to showcase how this is actually done. And to do that, I kind of taken a screenshot here. First, we'll do it in a screenshot, and then, we will kind of walk through that in the demo. So what I'll be doing is I'll be basically setting a date for reconciliation. I'll put the balances. I'll reconcile my statements by looking at my bank statement, and then I'll just hit the reconciliation button, and I'll be all done, right? So let's move on to that process. So here I have my demo account, and I'm going to showcase trust reconciliation first, okay? So to reconcile in any software, what you would do is wherever the reconciliation button is in that software. In our case, it's right here under accounts. You'd kind of use it, you'll say reconciliation and then hit the trust account, okay? Now, the normal process of reconciliation is doing it, at some particular date. Generally, you keep a fixed date and then do it during that time. So let me showcase you how it's actually done. I'll hit the help button, and that will walk you through, how to actually do it. So first and foremost thing is let's walk through the help step by step. So you need to click on the deposits and balances to actually clear. So first thing first, you need to establish a date. So you'll set the date of reconciliation. Let's say in this case, I'm going to reconcile for, 15th of July or something like that. Then you enter the bank statement. Then you clear the statements one by one. As you see here, I've cleared 3 statements, and I did not clear these 2 because I don't see them in the bank. And when these 2 balances are same, what you saw in this, you click on the start button. So if you actually noticed it in great detail, this part is exactly what we saw in the document. The date, the bank balance, and as you start clearing, right, you're showcasing your total outstanding and your that, and you put your bank errors, and then you just watch these 2 things equate, and then you reconcile. So let me quickly show you a reconciliation. So I'm going to reconcile not to 21st. Let me reconcile to 30th of June. Let's say on 30th of June, my bank balance was $156,490.23. Let's say that was my bank balance, okay? So it tells me that in the month of June, these are the unreconciled transactions that I have. So there's a $500 invoice that I paid for myself. There's a $113 invoice that I paid for myself. And there were 2 retainers that came in that month. So it's a low volume month, so that's what it is. So what we do is, first thing first, an ideal way is to open your bank statement here. You open your bank, keep your bank in one tab, and then keep your software at the other, and you start looking to see when did, this transaction actually happen. The software tells you that it happened on, 26th. Did it actually happen in the bank on 26th? If it happened on 26th, you can just say clear. And as you saw here, when I cleared it, the total cleared transactions became 500, right? The outstanding deposits are 300 because, I still haven't cleared those 2. And the outstanding payment is 113, and there's no bank error. Now you look at the next one, $100. I deposited it on the 26th in the software, but maybe the bank cleared it on the 28th. So you can click here and say, hey, that one got cleared on the 28th. Then you look at the next transaction, which is $200. As you saw here, now 300 became 200. So I cleared this one. Maybe that one got deposited on the 29th, right? So So now I've cleared 3 transactions. I've cleared 1 withdrawal and 2 deposits. That leaves me with the last one, and that one probably happened on the 27th, and I clear it. As soon as I clear it, you'll see that all my clearances have become 0 because I've cleared everything here. My total clearances are adding these two and subtracting that, which is $313, and my reconciliation button comes on. It does not come on if I don't reconcile. The moment I reconcile, everything is done. These two match what is there in the bank with what is there in the software. It comes here, and I hit the reconciliation button. That's it. So I'm going to summarize again. Obviously, now I cannot reconcile June because I have already reconciled it, right? But I'm going to summarize. Let me show the statement, and then I'll summarize the process. It's only a 4-step process, right? Like I entered the date, I entered the bank statement, I finished off my reconciliation in this. So let me show you how the reconciliation statement actually looks like. The reconciliation statement looks like this. So it tells me that, hey, that's my bank balance. That's my outstanding. I cleared everything, so that's why that is 0. There was 0. There's no bank error, and then it just lists me all my reconciled elements. Let me now reconcile for today. Okay, and probably what I'll do this time is I will not reconcile a few transactions, right? Like I'll say like, hey, so let me say I will not reconcile, these $200, So that means I'll say 157,790.23. Let's say that's my bank balance today, right? And I'll keep reconciling one by one. So that's reconciled. So I put the date, I put the bank balance, and then I'm going to go to my bank and say, hey, when did Goofy Disney, my client, pay me the retainer? It was on 10th. It was a cash payment. I deposited on the 10th. That's good. The next one is, when did Simon Garfield give me $1,500, right? The next one is, when did Jean get me the check 555? When did that get deposited in the bank? Look at that and then clear that. Now, I did an invoice payment. When did that happen? Maybe it happened. I did it in the software on the 11th, but bank cleared it on the 12th. So I'll just do that. Let's say bank did not clear that. Bank for some reason, I did a transfer and the bank never cleared that. I'm going to leave that off. Like the way that TNG, I forgot to deposit that money, right? So that $100 is not showing up in the bank statement either, so I'm not clearing those two. Let me clear all the rest. You see that when I cleared everything, I got the reconciliation button. I did not get it until then. Until these two elements did not match, I did not get it. Okay? That's why these two are very important. Entering the proper date and looking at your bank and entering the bank statement is very, very important. Then I hit the reconciliation button. Now, one key element that I forgot to show is the client trust listing. So for $156,490.23, we need to show to the Law Society what is the distribution for every client. How much is Ryan Wilson? How much is Toby Maguire? And when was the last date of activity? You need to show that. And the software can show that in a few seconds. So as you saw, clearly the reconciliation did not even take me 2 minutes to do. Now, this is as of today. So here you go. That's my bank balance. The $200, the one that, outstanding deposit under this is displayed. And then these are all my reconciled statements. Then I showcase the outstanding deposit, what it is, why did it not clear? I know that. Then the deposit, why did that one not clear? Probably it's a cash. I forgot to just deposit it into the bank, right? So I now know I have $100 sitting in my hand that I need to go and deposit, and then it shows me a reconciliation, all the rest. So next month, when I go back to do my reconciliation, if I had deposited that $100, I'll be able to clear those two. So now I should only have two transactions to clear. Look at that, the retainer and this one. So if I actually deposited the $100, I'll be able to clear that, right? Like, and the trust transfer, I'll be able to clear that as well. Like, so if my bank balance was 157,790.23, if that's what the bank balance was, I'll get the reconciliation thing. Now, let's say it was that much, right? I will not get the reconciliation button because there's a 23-cent issue. So now you're going to go and see why is there a 23-cent issue? Probably because the bank made a mistake and will capture that as an error. Now you're to pick the phone and call the bank and say, hey, why did you over-withdraw this 23 cents from me? They'll say like, oh, that was a fee that we transferred, and then you're to argue with them saying, hey, this is trust. You cannot do that, and you should get that money back, from them for the next reconciliation to occur. And you can explain to Law Society, hey, that was a 23-cent bank error that the bank actually made a mistake. Okay? So that's how you would reconcile month by month. Now, what's the key advantage of doing reconciliation? Okay, I'm going to come to that in 2 seconds. I'm going to leave this unreconciled. Let's hit this compliance button here. When you hit the compliance button here, what we show you is we show you all the Law Society requirements. Like, you need to download your trust ledger. You need to download your general ledger. You need to download your trust receipt document, your general receipt document, your payments, your general disbursements. If you did not reconcile, there's a probability that these documents, the data in that document for those unreconciled transactions probably has some error, right? So you would have downloaded a trust ledger for the month of January. That might have a trust transfer error, right? Like, reconciliation is the only way you're going to catch those errors. So we strongly recommend that you first do the reconciliation first. Like, this is going to take you 3 minutes and this is going to take you 3 minutes, 6 minutes. Do that. And once you have done these two, then just go ahead and download these documents, keep them in a particular folder for that month, and you're actually done with your compliance. So the overall activity, we believe, should be 10 minutes. Like 3 minutes, 3 minutes, 6 minutes, and all these downloads should take you under 4 minutes. So that's why, we have the header of this presentation, hey, reconciliation and the entire compliance should actually take you 10 minutes and not, the entire day, right? Like, so that's why we're saying like, hey, if reconciliation is such a simple process, that the trust reconciliation is a 4-step process, general reconciliation is a 3-step process, and you did it so fast by just clearing transactions, and just keeping your bank statement and the software right next to each other and just clearing them one by one. That's it. Like, you completed your reconciliation, download your compliance statement, and be done with it. Let's now move on to a demo where I'm showing you general reconciliation. How do you do that? It's no different from trust. As I told you, general is even simpler because it has less things to do. So let's go to general reconciliation. Right? Again, the steps are exactly the same. I'm going to choose, the date first, right? Enter the date first. Then enter, which, in general, you might have multiple generals, right? Like you want to choose which bank, enter the amount, clear the transactions, and be done with it. That's it. So let's now go ahead and do that. I'm going to do a general, reconciliation. Let's say, my bank balance was $11,738.54, right? Oh, sorry, 938.54. Okay. So the first thing first, like, these are the transactions for that month, right? Like, so I'm going to say, hey, my binding fees, do I see it in the bank? Is it on the 11th? Maybe in the bank it says it's on the 12th. Okay, then you just hit the 12th, right? I see the client payment, the check, the credit card payment that I processed for John Tree. I see it on the same day because it was a credit card, so I can just check that one, right? Then I look at my client payment, Dobby Potter, he paid me, there was a deposit of $101.70. Do I see that? Yes, I can just clear that, okay? Do I see the LSUC fee that I pay? maybe, I have issued the check, LSCC has not cashed it yet, right? So I don't see it, so I'm not going to clear that. And the land transfer tax, I'm going to clear. So as soon as I do that and I leave LSCC free, you see the reconciliation button comes on. It does not come on otherwise, right? If the reconciliation button comes on, that means uLaw believes that what is there in the bank and what is there in uLaw are reconciled, and you will hit the reconciliation button. Now, general is even simpler than trust. As you saw, I didn't have bank errors to deal with. I didn't have client trust listing to deal with. So when I open general reconciliation, it just tells me hey, that's the balance you reported in the bank. The $100 is the only thing that LSUC fee that did not clear. Everything else cleared, and that's what the balance is. These are your clear transactions, and that's your outstanding. Done. Now, if your transactions are reconciled, that means your HST is good, your ledgers are good, your receipts are good, right? Everything is good. That's why we were suggesting once the reconciliation is done, you can directly go to compliance and you can download all these things with no fear, right? Everything can be done very quickly. As you saw, I did the general reconciliation. I know it was only 4 transactions, but I did it in under 30 seconds. So, you can do the math. If you have about, say, 40 transactions, per month, you're going to take about, say, 3 to 4 minutes, right? To do the reconciliation. It's not going to be a huge effort, So let me go back. So we talked about trust reconciliation. We talked about general. We kind of gave you a small demo, and now we'll talk about benefits of reconciliation and how does it make you, audit proof, right? The first thing, in reconciliation is it catches issues, right? It catches 2 kinds of issues. It catches all transactions that you have in your accounting system that do not match with your bank record. So when you actually see something that you cannot clear in uLaw, you actually know, oh, that's a check I issued and probably the person has not cashed it yet. You know that. That's a great advantage, right? It catches that issue. The second one is it catches, bank transaction that you forgot to enter in the accounting system, right? And when I say forgot to enter, you might have not entered for very valid reasons too. And you really, really forgot to enter it, because it was an error on your part, that's good. You'll catch that. You might also catch those that you did not put into uLaw because that was a bank error, right? So things that are missing in the accounting system you'll also catch. So you'll catch both sides. You'll catch faults on the bank side, and you'll catch mistakes on your side, right? So you'll catch both of them, and that's the biggest advantage of doing reconciliation. Now, when you do reconciliation, your accounting system is actually up to date. Every transaction, every ledger, every subledger is actually locked, basically because we saw a subtending clearance in the bank. What does that mean? It actually means that day when you did the reconciliation of both trust and general, you're actually audit ready. If an auditor came to you that day and said, hey, show me all your accounting statements, you can just say, hey, here they are, because you've reconciled. And that's the key advantage. We want to point out, people go crazy during audit time saying that, oh my God, I have to gather so many documents. And we believe that if you have been doing your reconciliations on time, you're audit ready every day. The auditor can just show up at your doorstep without a notice, and you're still audit ready. And that's the key message we want to point out in this webinar. The most important message is doing the reconcilitions on time. And this is where time and again we find legal practitioners fall off guard. It's not about entering, it's about reconciliation. If you reconciled, that means you've entered everything and you've validated with your bank. You are audit ready anytime. And as I showed you, those 9 documents that you need to download are just download. You don't have to even look at that data, basically, because if you have reconciled, that data is absolutely accurate. The next big thing, what does reconciliation mean is, you're actually ready to file your HST. So by confirming your expenses and your income, in general, right, when you do general reconciliation, by confirming the 2, you actually marked your HSTs properly. So probably, there could be some errors. You could have still said, I got $75 and did not mark an HST, okay? But most likely, we are assuming that you did that process correctly. You are ready for filing your CRA taxes anytime, right? A key advantage of reconciliation is now your analytics that your software can do on your accounting system is perfect. If your general account is reconciled, now we exactly know all the deposits, all the withdrawals, where they match, what revenue accounts they are, what expense accounts they are, and we can actually do analysis and tell you, hey, your June was a good month, your May was not a great month. You made good money in real estate in June, but you did not make that much money in July. We can tell you those analytics, very easily in our system if your accounting system is reconciled. That means the analytics out of it has utmost accuracy. The data is perfect. That's what you're telling us. The next thing is reports out of your accounting system can have maximum impact on your business. Now you can look at your profit and loss statement and say, hey, these are some of the corrections I need to do. Reconciliation also identifies errors, there were some transaction that your accounting system did not have, and you caught it, and you say, oh my God, it'll catch you. So it'll have a huge impact on your business, because all your reports that you're generating, are there. And at the end of the day, it's all about peace of mind, right? When an auditor shows up, I've seen people panic several days before saying, oh my God, my accounting is out of whack. The reason why it's out of whack is because they did not reconcile by the month. If you are reconciled by the month, maximum you could be off is 29 days, and reconciliation of 29 days is not even going to take you 10 minutes. So that's why I said the first statement, you're audit ready every day if you reconcile, right? So at the end of the day, to have proper peace of mind with respect to your accounting, reconciliation is very important. Let's now move on to audit checklist, right? And does it, and what does it mean to produce these documents as reports, right? The question that we ask is, are you audit ready if reconciliation is complete? The answer is absolutely yes. Because the auditor, all the documentation that he's looking for is based on the fact that you've reconciled month by month properly. If you're really reconciled to the last date, the 31st of the last month when the auditor is actually coming, the answer is absolutely yes. If you've completed your trust and general reconciliation, then all the audit requirements are just become reports. There's no validation of data. You can just go one by one and say download, 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 and you're done. That's why this whole process should take only a few minutes. I've had clients who come to me and say, hey, I've got a notice from the Law Society for audit, and then all we do for them is we just look at their last reconciliation statement and say, hey, that looks perfect. Just go ahead and download these documents, and you're audit ready. Pretty much the checklist on the financial side becomes trivial. Now let's look at the checklist itself. I want to spend some time and understand the checklist, and I will bring out each and everything with respect to reconciliation, right? If reconciliation happened, right, properly, these would have been handled. The first thing is, in the checklist, there's a fee structure and handling of retainer checklist. The auditor will look to see if you're capturing your fee structure properly in your retainer, right? You're handling contingency fee or block fee, you should have all these things in your retainer. Creating a section in your retainer that covers charges that happen due to disbursements. So, you can just go check, right? And then having the, right procedure to issue a receipt, they're going to check that. So you can have a sample for that, right? Capturing disbursements of incurred payments in trust in general, right? These will be there in your trust ledgers. And capturing cost recovery on appropriate taxes. Now, these are the stuff that they're going to look for. Let's pay a little bit of more attention to the last two lines. Capturing disbursement incurred and paid out of trust in general. If you reconcile your trust in general, you would have seen that transaction that would have happened in the bank in the accounting system, and you would have actually cleared it. That means you're satisfying that bullet in right away. Now let's move to recovery of cost recovery and appropriate taxes. If you are accepting client payments, using credit card or checks or thing, and your reconciliation statement is actually showing that, as either reconciled or as an outstanding, deposit, right? you've basically done this as well. So reconciliation right away answers at least two of these questions. Like, if you do reconciliation, you are audit ready right there. Let's now talk about invoices. So invoices, they're asking about raising invoices in a timely manner, recording taxes in invoices, addressing client concerns, and all that stuff. Now, if you have reconciled, you can produce very easily a settlement statement for the matter. Now, the settlement statement has details on all these things. You can show the auditor how timely you were in raising the invoices. You can show the auditor in the settlement statement, hey, the split of HST or GST and PST, whatever it is, with respect to the total invoice. And you can say, hey, the settlement statement is by its very nature, is a clarification document to the client if he has any issues on my invoice, right? Like, I'll clearly tell him, hey, this is the work I did for you, and this is what happened in trust, and this is what happened in general, and this is the reason why we are doing the transfer from trust to general, and everything is perfect. Let's now move on to another set of regulations that they ask, which is called invoice balance. Like organizing invoices to aid easy retrieval access for invoice balance and particular matters and clients, right? And capturing the balance in trust and general account. As I told you, reconciliation enables you to download trust ledgers and general ledgers accurately. That means you are satisfying this clause just by the fact that you're doing reconciliation. Getting paid from trust. That's the very nature. Reconciliation process is there to catch that. Like, it's there to see and ensure that you're doing your trust transfers properly and your general is matching with trust. If you did not mark it in your accounting system properly, it will not reconcile, thereby, getting paid, for disbursements out of trust, is not working, the procedure is not working, and ensuring that you're not over withdrawing from trust is actually, happening, right? So these two bullet points, the very fact of reconciliation captures that. Getting paid into general. So they have some guidelines on how do you get paid into general. Like, one of the key indicators is ensuring that the amount in general is less or equal to the invoice outstanding balance. As I told you, softwares mandate that. Like, softwares like us, we don't even allow you to put an accounting record, right, saying that you withdrew more than what is there in trust. That means you will not reconcile. So you will immediately catch such error as part of the reconciliation process, saying that if by chance you over withdrew, let's say the invoice was $113 and you withdrew $115, the uLaw ledger will show $113 and your bank statement will show $115, and you are like, oh my God, and that's an oh my God moment, and you're going to transfer back $2 back into your general, and then you will reconcile, everything will work, and then you kind of caught that. So that's a check mark, right? Paying disbursement from general, tracking, recovering disbursement simultaneously. By doing general reconciliation, you will see that what you recorded in the software with respect to paying your court fees, your filing, application fees, your, all that stuff, or even like getting paid for like disbursements like faxes is all happening there, and you'll capture that. And your deposits in general are going to match with the withdrawals from general, from trust, and they're going to match in the bank as well. So, you can get a check mark for that too. Now let's look at, the last three criteria: handling trust account and required procedures. Like, what the law society is looking for, or what an auditor is actually looking for, is maintaining client trust ledger, maintaining trust receipts and disbursements, maintaining monthly trust comparison and reconciliation. You're satisfying all these three, by the very nature of you doing it, and recording Form 9A. Softwares like ours, when you do an electronic fund transfer, right away pop up and say, hey, do an Form 9A, and you'll get a check mark in at least 3 of the 4 if you do reconciliation properly. Now let's move on to general accounts. In general account, what the law society is looking for is, are you maintaining proper general ledgers? Are your receipts and disbursements journals, accurate, like the way the law society wants? And they're looking at fee book, expense book, and recording of discounts and other write-offs, so that you're capturing HST properly. And capturing general monthly reconciliation. When you do reconciliation, you get a check mark, check mark, check mark, check mark. And finally, the taxes. We already talked about it. Like, if you're doing reconciliation, your expenses and incomes are captured in the software. That means your HST is pretty much up to the mark. Okay. So as you saw here, when we said that you are audit ready the minute you complete trust and general reconciliation, we were not kidding. As you saw here, you satisfy all the financial requirements pretty much by the very fact that you're doing reconciliation on time. How much time are you spending managing all these things? And what would be a benefit of actually using a seamless accounting software, right? Let's talk about that. So as you saw, you could do this in several ways. You could do this in QuickBooks. You could do this in, spreadsheets. You could do this in that. But all along the way, the problem was, reconciliation. Obviously, QuickBooks, you can do reconciliation much faster for general. In trust, they do reconciliation, but they don't do trust listing. So that means you still have a lot of time that you have to spend on any general accounting software to actually manage trust listing, which is a huge effort. But when it's an legal accounting software, right, you get all that stuff, very, very, very quickly and very, very, very easily. And that's where, the seamless accounting really makes sense. Practitioners are used to matter management. They are not used to accounting acronyms and all that. Simplification of reconciliation is very important. Any person running a business has a bank statement in front of them that shows them what transactions have got cleared. All you need to do is just take that and apply it to your bank, to your legal software, legal accounting software, and if it matches, reconciliation is done, right? Translating matter management workflows to seamless accounting is the key to saving time. As you saw in our software, we don't make you an accountant. We make you do what you're good at, which is basically, docketing your time, docketing your disbursements, pre-billing, raising the right invoice, and getting paid. And when you do all that stuff, we put all the ledgers in the back. And by doing reconciliation, now you've matched the ledgers that you put in the back with respect to what you actually have in your accounting software. And by that process, you simplified the whole thing, and you're pretty much ready. And what makes reconciliation simple is recording things when it happens. As you saw, I'm going to go back to my demo. As you saw here, right, when I was able to clear some of my statements, right, the fact that, something a cash was deposited in uLaw on 26th, and in bank it really happened on the 28th, really close to each other. The fact that we did that, made reconciliation very easy, right? So that means recording the data when it happens is very important. If you don't do this, that's where you'll get stuck in reconciliation. You'll say, hey, there's some data that's missing here in either my accounting system or it's missing in the bank, and you will only find that when you're not doing things at the right time. So if you're actually recording it at the right time, reconciliation is a piece of cake. And automatically maintaining ledgers and journals of matter workflows keeps accounting data and bank records aligned, right? So if you're basically, when you reconcile, if you put all these stuff and you're seeing that, if your eyes should be on the money, then, this whole process becomes very, very, very simple. So let's move on to the next subject. What are the benefits of legal accounting software? We already saw, it helps you with accounting. It helps you with, recording events when it happens. It maintains financial records. The bank records are now aligned, by the simple task of reconciliation. To summarize, it's all about four things. Compliance, so that you can get audited any day, any time. Accountability, so that means, you now know where you are in respect to your business, how much money is coming in, how much money is actually going out. You can run serious analytics to understand your business month by month better and correct, mistakes, if my expenses are high, I'm paying too much rent, you can correct that. And finally, it's all about ease of use, right? So this is what legal accounting softwares actually bring in as a benefit. Four things: compliance, accountability, analytics, and ease of use. It's very hard to achieve, all four of them if you're not using a legal accounting software. As part of this presentation, I made some reference notes. Most of my slides are directly from the Law Society templates. Some documents I definitely want to bring, up to people's attention here are what I call the paralegal bookkeeping checklist. I love that document basically because, I mean, it says paralegal bookkeeping, but if you actually look at it, it's no different from, other, what the auditor is actually going to ask you for, right? So if I kind of quickly walk through that, they're asking, what source of clients, indicate, are you doing trust accounting? Are you doing general accounting? And they're asking you, are you doing conflict of interest? Are you doing, how is your capital contribution? Are you doing all these areas, your client service communication? Are you doing all that stuff? So that's being asked. So I think it's a great document. It serves both lawyers and paralegals, even though the name says paralegal. So that's why I kind of highlighted that document. The next one is the spot audit guidelines. It's a very, very, very useful page. I think even before you get audited, you definitely have to visit this page because that page kind of gives you details what they're actually looking for. The books and records that you need. What are some of the surveys? The bookkeeping guidelines is the pointer is right there. So I put that into a reference so that people can kind of use that. Then I kind of put, practice audit, this one, here they talk a little bit more detail about some of the things that you can do, how to do time management, how to do file management, how to do financials. We talked about all that stuff now, how to do communication, technology, professional management. I like this reference, from LSCC as well, so I put that as well as part of the presentation. And overall, bookkeeping guidelines, right? You need to be on top of your bookkeeping guidelines to actually make sure, your financial statements are actually there. So before I go, I'm going to quickly summarize reconciliation for people who join late. Trust reconciliation is a 4-step process. First step is listing what you have in the bank, basically bank statement, outstanding deposits, outstanding checks, errors, and then, you either add them or subtract them, and that's your balance. Then, if you said this is your outstanding balance, you need to list all your outstanding checks. And if you said this is your outstanding deposits, you need to list all your outstanding deposits. That's step number 2. Step number 3 is just a client listing. So basically, if this is your outstanding reconciled mixed trust balance, you just list all your clients, your last date of activity, when that was, and how's the amount, and then add it up. And step 4 is making sure that these two amounts are exactly the same. This cannot take 3 hours. General reconciliation, only 3 steps. You put the closing bank balance, your overall, what is outstanding, what is deposited. You less that, you add that, and that's your balance. And then you list your outstandings and you list your outstanding deposits. That's it. It's a 3-step process. So, as the title says, it should only take 10 minutes. If these 2 reconciliations take 3 minutes each, then you have still 4 minutes left where you can go ahead and download all the compliance documents that we kind of showcased for you in this. So going back, what are the compliance documents that you need to download? You need to download your client trust, client general, your journals, which are the receipt and the payment journals, intertrust matter transfer, if you did that, fee book, and expense book. So at this point, for those who are already using our software, you know where to find us. Just go to our website, uLawPractice.com, and click on the login button, and you can use it. For others, we have a 30-day trial where we'll show you this whole experience of doing reconciliation so quickly. Okay. So with that, I'm going to open my chat lines, and let's see if there are any questions. We have about 10 minutes left. So if there are any questions, I would like to take it at this point. If not, what I'll do is I'll continue demoing certain features, and if as questions pop up, I can start answering them one by one. So for those who missed the demo, the reconciliation process is you just click on document generation, reconciliation, and you can either do trust or general. Actually, what I'm going to do is I'm going to actually put some transactions and then reconcile. Let's do that. So let's create a quick matter. Let's say add a client, John Handsome. I'm going to skip all this process of putting his, right? And we can save and matter for him. I'm going to make a very simple matter. Let's say it's a simple small claims matter, right? We can say John versus Jeff, right? You can just say small claims and hit the save button. Oops, I forgot to put the distance rate. Let's say that. Then now let's make it a little bit more interesting. Let's put the additional parties. I can say add Jeff. Oh, there's no Jeff. Okay. Let me add Jeffrey Jones as a defendant. Jennifer Jones, sorry. Trust account errors say bank fees are charged by mistake by the bank. How can I correct it? Okay, that's a great question. Let me answer that before I continue the demo. When bank makes a mistake and you find out in reconciliation, you put that as an error and you reconcile that month. Then you call the bank and you tell them to do the following. Let's say a classic example when banks will normally do that is a credit card transaction. Let's say, you used your credit card to actually process a retainer, right? You got the retainer from this, and let me show that example here, okay? And let's walk through that error. So let's say the retainer was $500, right? And you actually did it as a payment. You can collect that payment here, and let me collect the payment quickly. Let's say validate, collect the payment now, and I'm going to use MasterCard. I say 54545455. Hope that works. Oh, I'm putting it in the wrong place. Put it here. Name payment. Thanks. Oh, it got declined, but I'll assume that it was approved. I think I did not put enough 5/4 there. And I'll mark it here as a credit card payment, right? Now, when I go to reconcile, this is where I'll find that error. The bank would have deposited $495 and not $500, basically because they would have withdrawn that $5 as their fee. This is a classic trust error. When you go to reconciliation and you say trust, and you do it for today, you will see that there'll be these hundreds will match, but this 500 will not match, right? So your bank, in the bank, you will have basically 158,285.23. That's what your bank balance will be, right? And it'll not match. And you'll be like, what do I do? So then you clear that. Then you mark here as a $5 error. Reconciliation will happen, right? Now you reconcile that transaction with an error. And what will happen is now you have to call the bank and say, hey, $495 is wrong. You shouldn't have done that. You should have deposited the entire $500, and you should have withdrawn that $5 out of my bank account, which is a general bank account. So what the bank will do is they will give you $5, right, in the trust account. They will deposit that, and they will withdraw that other $5 because that's a fee, for credit card transaction that they want to charge you. They will withdraw that for you from your general account. Then what you go is you go into your software and say action, expense, office expense, right? And then you go into basically interest and bank charges, and you say bank charge, right? And that's tax exempted. And you say $5, and you can say credit card processing fee, right? And you hit the method is bank withdrawal, right? And you hit the submit button. So now the next month, when you actually come to verify your trust account, you will not have a bank error, basically because everything was perfect. That $5 came in, so you don't have to do anything in uLaw, and your bank balance will be correct. However, when you do your general account, you will now see that $5 show up, as a credit card processing fee as a withdrawal, and you can reconcile it. I hope I answered the question. So when there's a trust account error, you got to fight with the bank and get the money from them, withdrawing from the right account, right? They cannot pay you interest. If they pay you interest, you need to ask them to withdraw and say, you should not be giving me interest. If they withdrew accidentally bank fee, credit card fee, or any filing fee or anything like that, you need to call them and say, hey, I can't do that. Now, there can be another situation too where they completely missed a transaction or they made a mistake with a transaction, right? The account actually was, $250 was a deposit, and for some reason, whether it was like an OCR that read the check wrong or something like that, and it actually put $230, now you will not reconcile again. You will call them and say, hey, I put a 3, it's 230, your OCR, your optical reader or something like that read a 5 and it deposited $250. There's a $20 difference, and they will correct that entry. They will not put a debit or they'll not put a new withdrawal or a deposit. They will credit that very entry. So you will leave it unreconciled in uLaw, and you will reconcile to a lower bank account, and then next month you will actually reconcile that transaction. So you will do it that way. So whatever it is, reconciliation will catch that, and based on the error, you need to rectify it. I hope I answered that question. So let me continue with where I was. So, actually in the process, I actually showed you reconciliation. I put the $500 and you saw it there, right? So this is the key element of seamless software. I did something in uLaw in Matter, and it showed up in reconciliation as a valid credit card transaction that I could actually process, right, and reconcile. So that's the key element, of seamless. Seamless means the lawyer or the paralegal, the legal professional is focusing on the matter window. He has no clue about accounting. He did not know about accounting, right? My client, I kind of paid from my trust, right, $20 for my land transfer tax. It was a direct withdrawal, right? And I can say whatever the reference number is, and I can say land transfer tax, and it was paid straight from trust. When I do that in my Matter screen, right, now I'll see my trust receipts, and I'm managing everything here. The month end, I come here and I do my document generation, and I'm now able to do reconciliation in trust, right? I should now see the $20, the land transfer tax, so that I can keep my bank statement right next. So if I was really smart, what I would do is I would make this window really small. I would keep my bank statement on this, and I'll keep matching X, Y, X, Y. I don't have a bank statement here because it's a fake account, but imagine yourself in your real life. You can keep a bank statement right next, split your screen into half, and you're just marking one by one, just matching it X, Y, X, Y, X, Y. That's all it is. It's so simple, right? So I don't want to beat the subject to death, but reconciliation is conceived to be a real hard process. In reality, it's not. It's all about selecting a date of reconciliation, putting the bank balance, which you have right there, and then clearing one by one, just clearing your bank statements. That's it, right? So with this, we have a few more minutes. If there are any interesting questions about reconciliation, audit preparedness, I'll be more than happy to share. I will share with you guys a few more links. One of them is giving us some feedback. I'll send this form. If people can fill up this form and tell us how today's presentation was, there's any feedback. We are going to be applying for CPD credits for this one because it's a very important topic. Hopefully we will get it. If we get it, you guys can get CPD. But at this point, it's not a CPD. But I hope it was a very useful subject. So please give us your feedback. And with this, I'll wait for a few more minutes to get some questions. If not, thanks for participating in another very important webinar.